Good afternoon, everyone. Welcome to the webinar. Today we are going to cover British pound crosses. Thank you so much for joining us. My name is Kiana Danial. I'm the CEO of Investiva. I will show you how I look like in 2 seconds. Before we get started, I want to welcome everyone. Aburalaba, Basam, Christian, Pius, Pinto, RT, Anthony, Melissa, Mohammed, and everybody else who are joining us right now. Could you please confirm that you can hear me so we can go ahead and kickstart the webinar? In the chat box and the widget that you have, you could please type in Y for yes if you can hear me, double Y if you can see the screen. The screen right now shows, well, the beginning of the webinar, the title of the webinar. Okay, great. Thank you so much, everyone, for your cooperation. It seems we're good to go. A high-risk investment warning is something that I am, well, really enthusiastic to tell you about before we get into the trading. A lot of you already know about this, but it's very important to be reminded about it every once in a while. Please do remember that trading on margin can result in losses that may exceed your deposit funds and can completely wipe out your account. So before you decide to trade, you should really carefully consider your financial goals, your level of experience, your risk appetite, your risk tolerance, which is even more important, and what you really want to gain out of it. That will actually basically enable you to come up with a strategy that really matches your goals. So in today's agenda, as was said in the email that you received, we're going to first take an overview of the UK economy. Well, in the past 2 days, we've seen a ton of volatility in the British pound, so I'm going to talk a little bit about that and what has been causing it. A little bit about France and what the French upcoming election could have an impact, how it can have an impact on the British pound. And then we're going to get into the juicy part, which is technical analysis, developing the strategies, and then we're going to do a Q&A where you can ask your questions. During the webinar also, I'm going to, well, regularly take a look at the chat box. So if you have any questions, couldn't hear something, if you wanted me to repeat something, if you had a question about, well, what I was talking about, definitely go ahead and put in the chat box. This is a live webinar, and I'm really here to help you learn make some money out of this. All right, so I believe today the technical analysis, we're going to cover pound dollar, pound yen, euro pound. We may go through pound versus Aussie if we have time, but we'll see well how the time goes. So let's start with the UK economy and what has been going on in Britain. So after bottoming out, after Brexit happened, the British pound dropped, but recently it has been showing signs of strength, and a lot of it does have to do with the UK economical strength, despite Brexit negotiations and the referendum results. So as far as growth and GDP goes, the first estimate for Q3 of 2016 came in positive at 0.5%, which was better reading than expected than the 0.3% rate of expansion. However, the Q3 reading was slower than the Q2 final reading, which came out at 0.7%. And well, there are no clear trends for the quarter-on-quarter reading, but the UK GDP has been growing on a quarterly basis for 15 consecutive quarters already. And on the year-on-year, the GDP for third quarter grew by 2.3%, which is faster than well, Q2's downwardly revised reading of 2.1%. And to top that off, the third quarter's rate of expansion is the fastest in 5 quarters. And the annual GDP has been improving for 3 consecutive quarters after reaching a low back in Q4 of 2015. And so this is the first estimate. So only the output approach is used to break down by expenditure, and that is not available yet. So these were, so any, there were some offsetting, of course, components of GDP. There was a slower quarter-on-quarter growth, and that was due mainly to the 1% fall in manufacturing production, and also the construction output was also another factor. But these were offset by the 0.8% increase in services and the 5.2% in mining output. So according to the GDP report, this is the first release of GDP covering full quarter of data following the EU referendum. Additional commentary from the GDP report noted that the pattern of growth continues to be broadly unaffected following the EU referendum, with a strong performance in the services industries offsetting falls in other industrial groups. So this basically is the first explanation as the reason why British pound kind of bottomed out. The UK economy is kind of doing great, right? In terms of growth. All right. Next is the labor market and the employment. So what's going on over there? The number of claimants for unemployment-related benefits increased actually by 9.8 thousand in October, which is much more than the expected 1.9. So basically 19,000 increase. And the number of claimants have been increasing for 3 months in a row. And but on the other hand, despite this increase in claimants, the jobless rate for July until September period fell to 4.8%, which is very close to what we have here in the U.S. Oh, by the way, for those of you who don't know, I am located right here in New York, looking at the globe, trying to make a sense of what's going on around the world for the forex industry. So that is interesting to keep in mind that the UK and the US kind of have the same unemployment rate at the moment. And so the 4.8% for the UK jobless rate is the lowest reading since the July to September 2005. So 11 years ago reporting period. And the employment rate has held steady at all-time high of 74.5%. So the downtick in the jobless rate seems to be very healthy. There are other components with the labor market. We do have the wages. The nominal average weekly earnings grew by 2.5% on a monthly basis. There are bonuses that we can look at. The bonuses were stripped. And the 2.7% increase in the fastest in 14 months, while the 3-month average is the fastest in 12 months. And so the real wages have been in positive territory since September 2014. So there has been actual growth in purchasing power. So again, as far as labor market and employment goes, the UK seems to be in a strong position at the moment. Last but not least, we have the inflation, the CPI increase, the headline CPI, which came out. It increased by 0.1% on the monthly basis in October, and it has been advancing at a weaker pace for 2 consecutive months as of October, after peaking at 0.3% back in August. On an annual basis, the headline CPI increased by 0.9% in October, and it missed the expectations that it will increase by 1.1%. So it missed like by 2 points, right? And despite this slight dip, the reading is still the second highest reading since November 2014. But the core reading, it weakened from a 5-month low of 1.2%. The biggest drag to the monthly headline reading was the decline in the price of food and non-alcoholic beverages, clothing, and the fall in the cost of healthcare and medicine. So putting those all together, the inflation has the Bank of England's projection that the annual inflation would be at 1.3% by the end of 2016 has dipped, has not been really happening. So that is a kind of a drag to all the other positive things that are going on. But on the brighter side, the PMI reports are indicating that the lower pound, the British pound, is having an inflationary effect. So time will tell if this will translate to an actual increase in the CPI, because the Bank of England has said that it's relying on the inflationary effects to the lower pound, and that the CPI may even temporarily overshoot the bank's 2% target. All right, so this kind of give us an overview. Well, despite these were all economic outlook, despite Brexit. There are other things that we can also look at. The trade, the UK's trade deficit has widened a little bit, so they are in a little bit more deficit. Consumer spending has increased by 4.7 billion pounds, which is the same as last time, and broadly in line with the 6-month average. So altogether, it seems like the Brits are doing well, all right, economically so far. All right, but the elephant in the room is obviously Brexit and what is going on and how things can change. So there are 2 Brexit-related events that rocked the British pound this week. One of them was the UK Prime Minister Theresa May, well, the new Prime Minister. She gave a speech on Monday, and the British pound rose during and after her speech. So she, on fiscal policy, she started by talking, well, very positively about the UK economy, and well, rightfully so. And then she pointed out the key weaknesses. And then she said that while the UK recovery since the financial crisis has been one of the strongest in G7, our productivity, and I'm quoting, our productivity is still too low. So to kind of change this, Theresa May has established a new department tasked with developing a modern industrial strategy as one of her first acts as the new Prime Minister. And to support this, the modern industrial strategy, she said that her government will invest an extra £2 billion a year by the end of this Parliament to help put post-Brexit Britain at the cutting edge of science and tech. They're going to try to move on to different measures of economic growth. And another thing that she also said was on tax system. So she said that they'll review the support they give innovative firms through the tax system. and they want to go further and look at how they can make the support even more effective, because her aim is not simply for the UK to have the lowest corporate tax rate in G20, but also a tax system that is profoundly pro-innovation. So I think the US is kind of a competition coming along, right? Well, the UK has been doing pretty well on the innovation side anyway. And of course, you had to say something about Trump, the president-elect of the US. So she said that the UK is set to cut its corporate tax rate from 20% to around 17% by April 2020. By the Trump's tax plan is to cut business tax from 35% to 15%, which is obviously much lower. So Theresa May is now hinting that she could cut taxes lower still, just to be competitive, and a competitive edge with the U.S. and Trumponomics, as one may say. And then about Brexit, she was kind of optimistic. She maybe it was a poker face, or she actually is optimistic. We don't know, but she presented an optimistic face by saying that while leaving the European Union creates uncertainty for business, there are opportunities too. And then she renewed her pledge to strike a deal that is right for Britain and right for the rest of the Eurozone too. So she wants to trigger Article 50 of the which is what makes the Brexit referendum into an actual effect before the end of March next year, before the end of March 2017. And in order to start the negotiation process for an actual Brexit, she will try to get a transitional deal so that businesses and individuals can plan with certainty rather than going off in an uncertain era. But overall, she was kind of upbeat about Brexit, and that she's trying to reassure businesses. So that is one of the reasons why we saw massive gains in the British pound on Monday. But then on Tuesday, the Brexit negotiators met, and the top of UK Brexit negotiator is David Davis, and so he has to go ahead with the EU counterparts. Guy Verhofstadt, I don't know how to pronounce his last name, and so they had a little pre-negotiation, kind of negotiation, to discuss the procedure, and both sides apparently agreed that Brexit needs to be finished by next EU election. Which gives you a window of more or less of 14 to 15 months, right? And so while the UK side, David Davis, described the meeting as a good start, the EU side were a little bit more negative. They said that it is possible to find Brexit solutions where we destroy the four freedoms. I'm quoting this, right? The four freedoms are key. There are basic elements of the European Union: the freedom of movement of goods, services, capital, and of people. We will certainly never accept whatever development where these four freedoms are, I don't know if this is correct English, put at risk. So one of the conditions demanded by the UK before the Brexit referendum was to get back control of its borders in order to kind of get a handle of the immigration from other Eurozone members. And obviously this goes against the Eurozone's principle of the free movement of people. So that implies that the EU side is planning to draw the hard bargain. I mean, we knew that, right? But they kind of re-emphasized that they're going to go hardcore on negotiation with regards to the deal, and they're not going to make it easy for the UK to grant access to the single market and basically keeping all the good stuff and getting rid of the bad stuff. And so another EU member, he was a little bit more blunt. He said, I must stress again, Brexit means Brexit. That means leaving the European Union. That means cutting off relations and not cherry picking, not special relationships. And he said that I see a British government that keeps saying where it wants to cooperate closely and not how it wants to leave the European Union. And so these obviously kind of put the pressure back on the British pound. As much as Theresa May was optimistic. I'm sorry, I'm getting a question here from Mahamud, right? Yes, it is started. I'm hoping that you can hear me. All right. So anyway, so this is basically what has been going on in the past 2 days. And next we have Brexit, potentially, which is the exiting of France from the Eurozone. Obviously, everything is going the world is kind of getting more nationalistic. Trump wants to do things for the U.S. The Brits want to go separate. Everybody basically is becoming, the world is kind of moving away from globalization, and the French are also taking kind of that route. Their election is going to be on April 23rd, 2017, and the second round will be on May 7th, 2017. And so that is a little bit longer ahead before the Brexit. But and even though this election is months away, the political headlines in France are starting to impact the euro's price action. So that is going to kind of impact the British pound as well, because they sometimes will get directions from each other. And the reports and opinion polls reflecting the rise of populist sentiment and setting the stage for a bitter divorce from the Eurozone has been kind of bearish for the euro. So that is kind of interesting for euro pound, because on the one hand we have Brexit, and then for the British pound, and then on the other hand we have Brexit, which can impact the euro. So really, really interesting times to do trading. And with that, I'm going to move on to the next important part of our webinar, which is actually developing the strategies now that we know the fundamentals. One more thing that I wanted to take a look at was the upcoming events for the UK, so that we can also put into consideration the short-term strategies, even though I don't recommend short-term trading, but still it's good to know what's going to happen. So look at the British pound in the coming weeks. We have, well, today, this is going to come out in 5 minutes, which is going to be interesting. We have the GDP on Friday, so that's going to be, I mean, we're hoping that it's going to keep up with what we already had. If it does, that's going to be, again, better for the British pound. So these are some of the speculations that you want to do. The consumer credit next Tuesday, and we have consumer confidence on Wednesday. So we still have some room for speculative trading as well. You can all see the chart. All right, can everybody see the chart? Because this is very important. If you were just listening to me right now, now it's time to come back to your, okay, thank you, RT, for responding. So now it's time to come back and to your, if you're joining us from your PC or Mac or iPhone, now it's time to look at your screen. So we're going to start with pound dollar. All right. Okay, so everything looks good. So this is the naked daily chart of pound dollar. We had Brexit here, breaking below all-time lows, and then we had another dip, and now we are facing this kind of volatility. On Monday, this shows the bullish, the gains in British pound after Theresa May spoke, and then the negotiators, the Brexit negotiators came into place, and then the British pound kind of went down again. But in general, it's kind of consolidating, and there is, I mean, in my opinion, we can actually this could be a development of a chart pattern. Who can tell what it is? Let's see if anybody has the eye of a short-term chart pattern that we can see here. We had an uptrend over here, kind of a resistance, up a little bit higher, then down. Let's see who can identify this chart pattern. That is correct. Congratulations, Jeff. It is. It could be a head and shoulder pattern. So let's just add our indicators that help us a little bit more. My favorite, Ichimoku Cloud. By the way, my book on Ichimoku trading for experts is coming out on December 15th. So stay tuned for that. It's going to be awesome. British pound is still below the Ichimoku Cloud. We're going to add our fibs to see what are, do a short-term fibs and long-term fibs. So Fibonacci retracement, right? So we're going to do, this is the short-term Fibonacci, just to kind of get an idea about our levels. And I'm going to erase that and create a longer-term one. So this is basically our medium short-term pivot level right here. Better at 23% is 124. All right. Let's actually make sure that everybody can see this. Oh, sorry. All right, let's hope you can. What is very important here is actually the prices, right? Then the next level is 38% of Fibonacci at 126. This is our second pivot level, which kind of falls on. So the Ichimoku cloud is pretty thick. So we actually have 3 pivot levels. The third one, which is also resistance now, is the 50%. Let's see. And then, of course, we have the 60%, which is also a support level from previous price action. Looks like the Fibonacci is a little bit off. All right, so I'm going to delete that so we don't get confused. And of course, we have our support level, which has been supporting pair from dropping lower so far at 121. All right, so this is our short term, and then I'm going to also take a look at the monthly chart, see what's going on there. Well, we had 1, 2, 3, 4, 5 consecutive months of drops after Brexit. Our key resistance in a long-term point of view is at 143-ish. All right. But even on the monthly chart, the pair remains below the. All right. So, but I mean, that doesn't mean that there's bearish pressure, but it definitely is not a bullish signal. So that is what we're looking for, right? So this 142, 140, so you see how many times, let's take a medium of it, has been tested back in 2001, a bunch of times, this area, right, between 140 2. This is our well, now is our previous support zone, which has now turned into a resistance zone. All right, so we have a long time to go back. One more thing, though, we still have space to go down as well. Look at pound dollar back in 1984. That's the year I was born. It was actually very close to parity. So technically speaking, I mean, even though this is a very long shot, this has happened. The pound dollar has been all the way down, close to parity. So if things really go wrong, and I mean, for this pound dollar, let's actually get a little bit more into this. So for a pound dollar bearish strategy, what do we need? We need weaker pound combined with stronger US dollar, right? Why? Because the US dollar is quoted second. All right, and so far, so after Trump presidency, the US dollar has been gaining, but will that keep up? So right now, I mean, just looking at it right now, Theresa May is trying to be optimistic. The UK economy looks pretty strong, but so does the US economy. The US economy has been great under President Obama. Unemployment is at lows that are quite similar, as I said, to the UK. And Trump becoming president right now is putting aboard momentum on the US dollar because unlike what we thought, the markets after Trump won, everybody was very fearful of what he's going to say, and he has been doing really creepy and crazy things in the past 2 weeks since he became president-elect. But his policies are the things that right now the markets are betting on. They are betting that Trump is not going to be as crazy as we thought, and he is going to help regulations. He's going to help America becoming America first. So that is what so right now it is important for you to understand that all the strength that we're seeing in the US dollar right now is based on speculation. The US economy, we knew that it was strong. Right now, just the Wall Street, the traders are speculating and betting that Trump is going to not be crazy and is going to do well for the economy. Nothing has happened yet. Trump is not president yet. Trump is becoming president January 20th. As Investiva students know this, but right now, in my opinion, even if Trump really is going to do well for the economy, that is already priced in. It is important right now that I also mention a little bit more about the U.S. economy that I'm pretty sure that a lot of you are curious about. Well, the most important thing that you need to know is that the rate hike is probably coming based on what Janet Yellen, the Federal Reserve Governor Janet Yellen, said last week. She, it was in the official release of her remarks. She said that a rate hike could well become appropriate relatively soon if incoming data provides some further evidence of continued progress towards committee's objectives. So that was great news. That is another reason why the US dollar got stronger. She also mentioned that the US economy, the GDP has been doing great. The growth has picked up from 1% to nearly 3% in Q3 2016. Labor market job gains have been slower, but still above the estimate of pace necessary to absorb the entrance for the labor force. Inflation is higher than earlier this year, but still below the Fed's 2% target. So that is a little bit of a drag. And one thing that really had concerned the markets before the election was that if Janet Yellen is going to get kicked out of the Federal Reserve if Trump becomes president, because he had said that his kind of disappointed in Janet Yellen, but she said that nope, I'm going to stay. So the rumors are kind of have been a cap has been put on the rumors, and so now it's just basically a wait and see mode for the markets in the Trumponomics, right? And the markets are obviously betting that Trumponomics are going to be good. So again, the important thing is that both rate hike and positive outcome of Trump presidency may have already been priced in the U.S. dollar strength, as well as, well, if you trade stocks, well, the stocks today again, once again hit all-time highs. The Dow today and yesterday has just been going up and up and up. So it's kind of a stretch maybe, but so very, very interesting times. Let's put it that way. So with that, what I'm trying to say here is that unfortunately with the pound dollar at the moment, it's a very weird combination. We have two countries that both have had incredible change in terms of their politics and very unexpected change. And so the interesting part of that was after Brexit, the pound lost its value, but on Trump's election, on Trump's election and victory, which is right here, U.S. dollar, it started to lose, but then it gained, and therefore we have this again another bearish movement. And remember, the stronger the U.S. dollar gets, the lower the British pound goes, and that is when we saw this kind of new low in. Oh, I'm sorry, this is not it actually. The new low should have been, yeah, it's right here. So it wasn't as much, and the reason for that is that, it kind of balanced out probably, and that's the reason. So it's kind of like which one is going which direction and which country is going to surprise us more. One technical indicator right now that I can see here, which could be an early indicator that matches our positive fundamental strategy, is on the Ichimoku cloud. You can see the Tenkan line crossing above the Kijun line. For those of you who have forgotten what Ichimoku is all about, the Tenkan line is a moving average, is a fast moving average, the blue line, which averages out the highest high and the lowest low of the past 9 periods. The Kijun line is a slow moving average, averages out the previous 26 periods. So now that the fast line has crossed above the slow line, this could be an early, not confirmed, and I again stress not confirmed, indication that the market could go up, which kind of, if Theresa May is not just putting on a poker face about her optimism about the UK, that could be a strategy to go through with. I know that I'm sounding a little bit vague right now, and there is a reason for that. It's because we are getting a ton of mixed signals with British pound, fundamentally and technically. And we really need to be in a wait-and-see mode. This head and shoulder pattern may or may not complete. If it does, it is going to be a short-term thing. So here is one strategy, right? Right now we're in wait-and-see mode. The head and shoulder, this tiny head and shoulder, which could be actually more visible on the 4-hour chart, it's short-term. Again, I mean, I think right now all we can do in terms of trading the pound dollar is at the short-term scenario rather than long-term. We really don't know what's going to happen long-term. We really need to know what Trump is going to do, what Brexit is going to, how Brexit is going to pan out. A lot of unknown their economy is good, but then we have risky things coming up. And we have France, like really unknown stuff. The volatility could be good for you, but at the same time, you really need to calculate your risk and reward ratio, how much risk you're willing to take. So as far as this kind of head and shoulder consolidation goes, on the 4-hour chart, we can see pound dollar is kind of gaining, but on the 4-hour chart, it's also below the HMO class. This is another mix, add up to the mix. I am going to take a look at the market sentiment. One second, I'm going to check that up. Okay, so yeah, even the market sentiment, the ratio of long to short positions of pound dollar is kind of mixed. So 65% of traders are long, but long positions are higher. So that is kind of a bearish sign because we use this kind of market sentiment as a contrarian. But on the other hand, the trading crowd has grown further net long from yesterday, but moderate since last week. So this combination also kind of gives us not a real concrete answer as far as the market sentiment goes. And we can also see it in the chart as well. It's basically consolidation, right? So back to the, let's say, a bearish scenario. If we see another break below, I'm actually going to bring it even further down, 123. This is our bearish trigger. So a break below 123 could give you a very weak signal of drops towards 122. That could be a short-term bearish scenario. On the other hand, again, we are on the 4-hour chart. I wouldn't still get on a trade today. Here on the 4-hour chart, also we have the Tenkan line breaking above the Kijun line. So we have a little bit more reason to be bullish, I would say, than bearish. But I would wait for a break above the Ichimoku at 125. And if it does happen, right here, right? If it does happen, I would then go ahead and target 126 and get out of it. This is, well, 4-hour chart, I would give, well, depending on your risk appetite, again, you could expect to take profit anywhere between 3 days to 2 weeks. All right? I am not a big fan of very tight stop losses anymore, at least. But with pound dollar, you really should be careful. And so if you have a higher risk appetite for the bullish scenario, getting in at 125 or 125.10, targeting 126, I would set 123 for a high risk appetite and high risk tolerance. I would set 122 as stop loss. Moderate 123, and low risk appetite, the stop loss should be at 124. All right. So to sum it up, right now we don't have a concrete long-term strategy for pound dollar. Going back to the daily chart, if you do want to monitor what's going on with pound dollar, well, we need more gains from the British pound. A break above this very thick but flat Ichimoku cloud could indicate further gains towards 128. But as we can see right now, the pair could be entering the Ichimoku cloud. That is a sign of continuation of the consolidation. So this head and shoulder that I identified, it could very well just be a consolidation. And we could see this range to continue between 123 and 126. And I actually think that is your best bet, and that's why I was setting up the strategy on the 4-hour chart, which is a shorter term period, because it seems like pound and dollar are exposed to the equal amount of risk and volatility and economic strength. So this war between the British pound and the US dollar is kind of equal. That's why it's been kind of bouncing back and up right after the elections. So for range traders, this is basically your range, 123 to 126. The range still is not confirmed yet, but it's quite possible the pair is going to enter the HMO cloud and it's just going to bounce up and down between this range. So a strategy for a range trader is just to get in whichever direction that is better for your interest rate. That is also something that I've mentioned in my book, Forex Trading Hacks, that you can find on InvestDiva. So you want to take a look at which direction is going to give you a positive interest rate, so you don't lose money if you stay in that trade for a long time. Make money by overnight trading. So pick a direction and target the range. Lower risk appetite, your range could be between 125 and 124. Higher risk appetite, the range could be between 126 and 123. All right, so that was pound dollar for you. I'm going to quickly take a look at pound yen. Pound yen is a little bit different because Japanese yen is not, well, Japan is not as in crazy economic times than the US, and therefore, look, the UK economic strength has actually made an impact on the pound yen. And I think I did mention in our Facebook group 2 weeks ago, we did have the confirmation of a break above the HMO cloud. The Tenkan line broke above the Kijun line, and today, actually 2 days ago, we had the Chikou span breaking above the cloud as well. So we have 3 Ichimoku indications for bullish movements for pound yen. Japanese yen right now is neutral. It's actually weakening because of the US dollar impact. US dollar is strengthening, right? Therefore, dollar yen is gaining. Therefore, Japanese yen is weakening. Therefore, pound yen is gaining. All right, you see the logic there? Okay, if you have questions, ask. All right, so that is basically what's happening, and that is why we are seeing the pound yen might have very well just bottomed out. It is now reaching the zone of the Brexit day, 139. It's great news for me. I'm bullish on pound yen. I've been staying in my, well, I bet wrongly on Brexit. I got into a bullish position right around here. So I've been losing a ton of money, but I remained in my position. So it's kind of reaching back up. So that is something that I want to happen. But what I want to happen is not what matters. The technical indication, the fundamentals is what matters. So let's see from a long and short-term point of view what is going on with pound yen. This downtrend for pound yen started back in end of 2016, or I'm sorry, 2015, and bottomed out here in October this year, right? And is now approaching the 23% Fibonacci. That is our first barrier. That is the first barrier for pound dollar after breaking above the HMO cloud, and is where also acted as a resistance back in July. So 141 is our first target. And based on the fundamentals and the technicals right now, we do have kind of a good chance of it reaching there. We could see a pullback, but even taking a look at the candlestick formation, we have a ton of bullish engulfings happening here. One here, another will follow one. So we have indecisiveness, bullish, indecisiveness, bullish, indecisiveness, bullish. So bullish engulfing after bullish engulfing, a break above the HMO cloud, bottoming out over here, Tenkan line above the Kijun line, Senko span above the HMO cloud. So a ton of bullish signals from a technical point of view. All right, and then the next level is going to be on a long-term point of view. If you have higher risk appetite, would be obviously the next Fibonacci retracement level at 38%, which is 151. That will let me get out of my position with profit after 6 months, which is a very long-term trade. But, well, guess what? I have a high risk tolerance, and I can afford to do that. This may not be reasonable for everyone. You really need to calculate your leverage and your margin before you can for a long time. Anyway, so right now, so this is the daily chart, right? We could see a little bit of a consolidation. Well, tomorrow, let's see actually what happened to the, I believe the outcome of this British pound auto forecast was good because pound continued higher. What was it today? Where did it go? Oh, oh, this is 12:30. This must have been out. Oh, it's a report. Okay, so results are not out. So I'm believing that this result must have been good because the pound has been going up today. So, yeah, so the sentiment is behind it. 141, well, 50-ish. If you want to be a little bit more risk averse. 141, around 141 to 141 could be your bullish target. Depending on what the outcomes tomorrow, we could see a little bit of retracement again. You can set a limit order if you want to wait, right, and get in. You can set a limit order to get into a bearish position at 138, let's say. So this is limit order trading. You can order your broker, order Orbex to get in at 139, let's say, right, which is the open of today, provided if the market retraces a little bit tomorrow, and then again target 141 one more time. I'm pretty, so again, with all the indications that we've had, this 141.50 sounds like a reasonable bullish target for now, and then the next one, a long-term one. So again, with pound yen, we really can develop a long-term trading strategy. With pound dollar, we couldn't because we had two really crazy things going on. With pound yen, it's a little bit more manageable at the moment. And as you can see, the cloud is kind of moving up. So we have good things happening. Taking a look at the monthly chart as well, you see we have a massive bullish engulfing a candlestick formed in the month of November. So this is yet another bullish indication. The cycle seems to have finished because we had it bottomed out. Of course, the cycle doesn't exactly get back to its position, but this kind of looks like it has bottomed out with this massive gain of November. We were predicting that it could go all the way back to 119 and then go back up, but it kind of seems like it already has bottomed out. Historically, pound yen has never been lower than this. So, I mean, since at least 1994, for some reason we can't see anywhere behind that, before that. But so from a price action point of view, we kind of have a bullish indication here. I understand that the pair is below the Ichimoku cloud, but the moment has passed because, well, with Ichimoku trading, the moment it happens is more important than what happens next, right? So here we have yet another bullish indication. Let's take a look at the 4-hour chart for shorter-term traders. Well, obviously the market sentiment right now is crazy bullish, crazy up after flattening a little bit. It really doesn't show anything more than what we already knew. Looking at the daily chart. So yeah, so that is basically, I would go back to the daily chart for the trading strategy. obvious what's going on. You can get in at 138, or if you're already in bullish position, just be there. Target 140, 150. Stop loss in case something crazy happens. I would have it loose for now. I would have it as at the upper band of the HMO. I would have the stop loss at 131 for now. All right, so there you have it. That was your pound yen trading strategy. Any questions? All right, so we did pound yen. I am opening up right now, as I said, for questions if you have. And in the meantime, I'm going to cover one last. Okay, which pound cross do you want me to cover? Euro pound. All right. Let's take a look at euro pound. Yeah, euro pound is, as I expected, is a little bit. So this shows, first of all, this is very important. Euro is in a worse position than the pound because, well, euro is dropping, pound is obviously strengthening, and therefore we already had a break below the Ichimoku cloud. And again, so here with euro pound, we're going to go bearish, which is consistent with our pound yen position, right? So we're basically more bullish on the pound than the Japanese yen or the euro. With the US dollar, the US dollar could be actually more stronger in that realm, right? So here with euro pound, pair broke below the Ichimoku cloud, broke below the 23% Fibonacci level. Next stop, right here, 38%. Bullish strategy. Again, there could be a retracement a little bit today because we had this massive drop. It could go back up a little bit and go back down. You can play around with it. You can wait around. You can either get in right now or you can wait around for a retracement to get in higher, and then your target is a little bit above 0.83. I would, for risk purposes, I would bring up the target 0.83 or 60. All right, so this is our bearish target with pound, with euro pound. Break below that opens door for 50%. This is going to be incredibly strong. I think it looks like the yep. Shadow to shadow. More consistent with previous resistance, you see, so 50% Fibonacci level, previous resistance to confirmation. So this is our concrete support right now for euro pound. Long-term traders can take the risk to target this, but then again, the levels to be, oh, you see the sentiment is actually really behind the bears on the euro pound side. So this is 0.8365, which has acted as a support before a bunch of times, can act as a support again. You can target this, get out of your position, and then go for the next round, depending on how well the support acts. And if it actually supports it and it goes back up again, that will turn our outlook to bullish. All right. All right, guys. Thank you so much for joining me today. It's almost time. If you don't have any further questions, I would go ahead and end the webinar. Thank you so much for joining me today, and everybody else who joined me after, like in the middle of the webinar. I saw a lot of people just joining in the middle. You're very welcome. Thank you so much for interacting. Those of you who are sending their thanks on the chat box, and hopefully I'll see you next month. Invest responsibly.